This is the House Planet Mortgage Podcast, brought to you in collaboration with House and Holiday Home Mortgages. In today's show, we'll be running through all the documents you need when applying for a holiday let mortgage. If you need any mortgage support, get in touch with Triple H Mortgages today. The team offer an unrivaled service, whether you're looking for your first holiday let loan, a remortgage, or any other products such as residential, buy-to-let or HMO. To get in touch with the team, call 01453 887179 or email hello@hhhmortgages.com. You can also visit the website for further details, hhhmortgages.com/host-planet. Welcome to the House Planet Mortgage Podcast. Our goal is to share everything you need to know about holiday let mortgages and spotlight some of the leading products on the market. Today, we're going to discuss the documentation everyone needs when applying for a holiday let mortgage. And with me to discuss this topic and more is Joe Stallard from House and Holiday Home Mortgages. How's it going, Joe?
Yeah, great. Thank you, James. How you doing?
Very good, thank you. Okay, then. So, documents. You're just about to apply. What do you need?
Yeah, well, I think actually we can go even back further before you're just about to apply. I think that's one of the really important things here. It may not seem like the most interesting topic, but actually getting your documentation ready can have a big impact, not only on the success or failure of your application, but also the speed of that application as well.
Okay, so take us back to the start then. Take us through the journey. What does the normal journey look like when you're applying, and what are the documents that you're going to have to supply?
Cool. Okay, so let's start really simply. Every mortgage application is probably going to need some form of proof of ID. So here, typically, we're looking at a photo ID, a passport, or a driving license. So the thing for people to check around this area really is that they're in date. Expired documentation can't work for lenders. So a nice simple one to start with. The next one there as well really is your proof of address. So this is typically, we like to see a recent utility bill or a council tax bill, crucially with the address that you're actually living at. Often people can forget to move things when they move home or everything like that. And this is really just about making sure that lenders can find you with credit searches, and we're ticking those boxes to do the sort of bare essentials in getting ready for the rest of the more interesting stuff, really.
Okay, so we've got the ID, the proof of address, and you're the expert here, but I'm thinking you've got to prove your income. You've got to get your bank statements ready, maybe your pay slips, all stuff like that.
Yeah, you can almost tell you might have gone through the process before, James. Absolutely. So, there are some lenders out there that will work with no minimum income requirements, but that doesn't mean they don't want to see any documentation. They still want to understand you as a borrower. So for that, for your proof of income, if you're employed, typically it will be 3 months latest pay slips. If you're new to a job or if you're in a contracting role, they might want to see proof of that contract as well. Now, for most lenders, how much you can borrow isn't really determined by these factors. So it's more just them getting to know you and understand you as a borrower, rather than this information being used for affordability like it would be with a residential product.
I see. So, another thing to consider at this point, and I am speaking from personal experience here, if you are self-employed like me and you run limited companies, how does this change things a bit?
Yeah, absolutely. So for a limited company owner, it will be a latest 3 years tax calculations and latest 3 years tax overviews. There are guides on the HMRC website about how to download these. Sometimes your accountant will have them rather than you getting them. If anyone has any trouble, get in touch. We've got guides and stuff we can point people in the right direction with. And maybe your latest 3 years accounts as well. I'm using 3 years. That's the sort of standard. There are lenders that will work with less for people who are more new to self-employment. But if we can use that as the gold standard, then I think we're in a good place. And likewise for sole traders, we don't have the accounts requirement, but the tax calculations and the tax overview documents, they're going to be what a lender uses to understand your income.
I'm having a very similar issue at the moment. I'm trying to apply for a new residential mortgage, and because House Planet's only been going for a couple of years, I need a friendly lender who's going to look on me favourably and not going to worry too much about the fact that we don't have 3 years of accounts yet. So yeah, I know this pain all too well. Okay, then. So we've got the ID, we've got the proof of address, we've got bank statements. We've talked about what happens if you're a limited company owner. What's next?
Yeah, just to go back and touch on those bank statements. So just a couple of things to raise there. So again, it's typically going to be latest 3 months bank statements for your current account. If you're moving money into savings accounts, or might have an account with Lloyd's and then have a Monzo account which you do your spending from, lenders are going to want to follow the transfer of money as well, just to understand where it's going. So we sort of say 3 months for kind of all active accounts. And bringing it back to the address point as well, we often see that when people move home, they might forget to update bank statement addresses and things like that. Try and get all of this documentation aligned so that it's there and there's going to be no questions asked from a lender or a broker.
Another thing I've experienced as well, and this is when I was an expat borrower and living in Qatar, the lender wanted to know that I was a bona fide employee of the World Cup organising committee. So I had to get a letter from my employer on a letterhead paper and signed by the HR director. Is this something you see as well? I imagine it is.
Yeah, a lender's always going to reserve the right to ask for anything throughout the application process, really. So, if there are slightly unusual circumstances, or if they have a look at something and it's not quite adding up to them, don't be surprised if there's questions. They're not questioning. Well, they are questioning you, but in a friendly way. It's a very regulated industry we work in. So, actually being able to answer these questions and tick these boxes is really important to them, and they may not be able to proceed without it.
And I guess from the lender's point of view, for them, it's all about mitigating risk, isn't it? So whenever something is flagged, it's like, okay, we need to tick that box, and this is how we're going to tick it. We're going to ask for a letter. We're going to ask for X, Y, and Z, and it could be absolutely anything. In regards to affordability, what else do lenders want to know apart from just seeing your bank statements?
Yeah, so when we look at affordability in the holiday let space, lenders do things in different ways. So the most common way they're going to work from is, if it's a purchase, is a projection of that rental income for that holiday let property. So how do you get that? Well, you go to a local or a national holiday letting agent, you give them the details of the property that you're looking to purchase, and they will come back to you with a letter. And again, we can template out and share with your audience, what this letter should look like. But ultimately, it should be addressed to the borrowers. It should state the property in question that we're looking to purchase. And then it's going to have a forecasted set of expectations for that property. So they might break it out low, mid, and high weekly seasons. And each of those weeks will have a different rental value. And then perhaps they'll put in there an idea of how many weeks of the year it would be rented for as well. So that's the most traditional holiday let borrowing affordability model. It looks at low, mid, and high weekly rates, averages that out over a period of the year, and then it's that figure that's going to go on to determine how much you can actually borrow. So, not even important for the application. It's absolutely vital for the application because it's the information that the lender is going to work from. But actually before that, for you to understand, can I borrow how much I want to for this property? That's the information we're going to need.
Yeah, exactly. You need to know that you're going to make a profit at the end of the day, and the lenders certainly want to make sure that you're making a profit. And when you do request that, as Sykes Holiday Cottages, I think used to provide that kind of those stats and that data for people. But I think you can just go to a local agency, a local short-term rental company, and ask them, and generally they'll give you a projection of what your property can earn. Okay, then, so we've got that for the affordability. Anything else? Any other documents that you want to flag before we kind of go to the next stage?
I think there's just a couple of other areas. So on affordability, most lenders will use the holiday let affordability model. However, some will use a more traditional buy-to-let affordability model. So you can still rent the property out on a short-term basis. However, rather than using the figures like we just described, they will base it off a traditional rental, a traditional buy-to-let rental calculation. So in that regard, it's a good idea to have a view as to how much that property would rent for as a buy-to-let. And if we go down one of those lending routes, then either a sort of tenancy agreement ready to go, or something like an ALA letter, which is a letter from an estate agent stating that this is how much the property is going to rent for as a buy-to-let. That's a really good set of options to have. The sort of third and final option, I guess, for holiday let affordability is looking at it on a traditional residential affordability calculation. So here, your income that we spoke about earlier and your credit commitments are going to be the driving force, and the lender's going to factor in, multiple running costs and things like that. So they are fewer and further between, those type of lenders, but they are still out there.
I did have a lender before. This was when I was in Qatar. They considered the low, medium, and high season rental. And I think that just about covered it as far as they were concerned. But then they said, it's okay because we've seen your salary and we know that you can top it up if there's ever a shortfall. So they considered both. And I guess there are lenders who they won't just apply one rigid model. They'll look at the whole ecosystem of the borrower.
Yeah, so we call that top slicing in the industry. So it's taking the rental income, and if it doesn't quite meet what we need it to, it's looking at your own income situations and can we, as you use the phrase, top it up. The good thing about the holiday let industry is it tends to be smaller banks and building societies that lend in this space that you can have a bit more of that dialogue with. There are some that won't entertain that, but again, they're looking for good quality business. So if you're a good client with a good property and the numbers aren't quite there, don't let that deter you. Do a bit more digging.
So provided you've done all this then and everything's been signed off and the lender's happy, you should have a mortgage, right? Anything else to mention?
I think for those purchasing, obviously your proof of deposit is another key piece. So here it's again about lenders understanding and following the trail of money. So if 50k suddenly appears in your bank account, don't be surprised if they're going to ask questions about where that's from. So if again you're moving it from account to another, it's be prepared to provide those different bank accounts. If it's coming in via a gift, again, depending on the amount, they might want to understand how that gifter has built up the funds. There might need to be a gift letter to state that the money's coming in as a gift and that person gifting it has no hold over the property or anything like that. So really just getting all those ducks in a row is going to put you in a great position.
Fantastic. And if people need any more help and advice, they should speak to the experts, Joe and the team at House and Holiday Home Mortgages. Where should they go, Joe?
Yeah, you can visit us at hhhmortgages.com. Drop me an email at joe@hhhmortgages.com or the team via hello@hhhmortgages.com. We can provide examples of those holiday let rental affordability letters. If you need to get a credit file and check on your own credit position before applying as well, we've got links to sort of free trials for credit reports and stuff like that as well. So don't be afraid to get in touch.
Fantastic. We'll put all those details in the show notes. Now, recently, Joe, we've had an interest rate cut. The base rate is down to 4%. Have we seen any movement in the holiday let mortgage market?
Not really, James. You're going to be disappointed to hear me state, to, I guess, educate some of your audience slightly, I guess, just because there's a base rate cut doesn't necessarily mean there's that knock-on impact to mortgage rates and in particular fixed rates. Anyone on a tracker rate will go down, yes. However, there's more that goes into mortgage rate pricing than aligning it with the base rate. So we haven't really seen much of a drop in that regard. As we speak today, the best rates are still probably likely to be the high 4%, more in the 5%, with sort of 60% loan to value products a bit better than their 75% counterparts.
And as ever, if you need a mortgage, if you need to discuss your circumstances, make sure you get in touch with Joe and the team. Joe, thank you for joining us on this month's House Planet Mortgage Podcast. Pleasure as ever.
Thanks, James. See you soon.
All right, that's it for today's House Planet Mortgage podcast. My thanks to Joe for joining us on this month's show. To get in touch with Joe and the team at Triple H Mortgages, call 01453 887179 or email hello@hhhmortgages.com. You can also visit the website for further details, hhhmortgages.com/host-planet. Until next time, happy hosting.